Hi, and welcome to my channel. For those of you new, my name is Dave and I work in financial services, and these videos are a mixture of my journey towards financial development and financial freedom. They will be about financial products and, more importantly, about improving your financial well-being. So let's get into this latest video. This latest video is about the 5 fundamental stages of financial and investment growth. First of all, what is your current position? Where do you fit in on the 5 stages? Your aim is to progress through the stages and improve your financial position, your quality of life, your financial well-being. This journey should be enjoyable, it should be personal to you, and hopefully it can meet your future goals and future aspirations. Now, to make progress through each of the 5 stages, it may well take you several months, it may well take you several years. But you will get there in the end. You just need to create a journey, create a plan, make decisions, and hopefully act upon those decisions. Now, stage number 1 for most people is what we call survival mode. Are you living paycheck to paycheck? Is your income barely covering your monthly expenses, your monthly bills, your outgoing? Do you see yourself in a never-ending vicious circle, and do you see no way out of improving your current financial position? Like most people, it may well be you're dependent on your employment as your one and only source of income. It may well be you have to get yourself a better job or create a side hustle to meet your increasing costs, whether that's rising through inflation, which we see at the moment, or may well be to alleviate yourselves from current stress you are facing at the moment, so hopefully to improve your financial position. Now, it may well be you may well have very little in assets apart from the main equity in your home. This mainly relates to young people or those starting out in their careers. So hopefully this is your initial start, this is your worst case scenario. As we said, it's stage 1, and hopefully you'll progress to the following stages as highlighted in the video. Moving on to stage 2 is what we call some kind of progress stage. So it may well be you start seeing yourself with some spare cash at the end of a month, or maybe a cushion to afford some kind of luxuries, or may well be you start paying down outstanding debt, or maybe you've created some kind of emergency fund to hopefully alleviate any stress when things go wrong or things break down and you need some emergency money in it quickly. So hopefully it will give you some kind of peace of mind when things do happen, or you may want to meet such unexpected events such as a car breaking down, some emergency repairs to the house, may well be a sudden holiday for the children for school, and hopefully you don't need to borrow from an additional fund such as a loan, hire purchases, shall we say, and hopefully it will avoid you some expensive debt, interest charges. Okay. In the progress stage, it may well be your net worth is improving as your outstanding debts or your liabilities are being reduced and your level of savings or emergency fund or investments are increasing. So at the end of the month, you are in a much better position financially than you were at the start of the month. On that basis, review and record your progress. Okay. Create a vision board. Write down a plan. Write down your goals. Where do you want to be in the short term? Say 3 to 6 months. Okay. It will give you greater reasoning or greater emphasis if you meet short-term targets, and then later on write down your long-term targets. But it will give you greater impetus because you'll see an instant reward, shall we say. You're seeing yourself moving in the right direction. However small it may well be, but it will give you pride, it will give you personal satisfaction towards continuing on that journey. And when you do reach yourself, say specific targets or specific goals, give yourself a small reward. It may well be a meal out, it may well be a day out, it may well be a leisure facility. Nothing too extravagant, shall we say, but otherwise it defeats the object of what you're achieving. Okay, but learn about the power of delayed gratification. Moving on to stage 3, what we call becoming debt free. By becoming debt free, I mean clear of consumer debt. So it may well be car loans, it may well be bank loans, it may well be personal loans, it may well be hire purchase or lease payments. Imagine the feeling of no longer having to pay interest on your debts, okay, or fees to another company, and then using that money for your own purposes to save or invest, and ultimately creating assets which will work for you and will increase your net month every month moving forwards by the form of receiving interest in a bank account or a savings account. It may well be dividends, or it may well be other forms of passive income. Now, personally, there are what we call good debts and bad debts. I no longer own any credit cards, any debts, outstanding finances, but I do have an outstanding mortgage. I have a mortgage on my main property and I have a buy-to-let mortgage on a rental property. Now, I could pay off my mortgage tomorrow from assets and savings, but I choose not to. I can cover my monthly mortgages through cash flow and savings through my main employment. Okay, I am making regular payments every month and my debt is being reduced gradually on a month by month basis as part of my mortgage. At present, my loan to value on my main residence is about 15%. I am paying a lot of capital. I am paying very little interest on that mortgage. And with regard to the interest rate is below 2%, so it's manageable, it's affordable. Whereby in my investments, such as my stocks and shares ISA and my pension, I'm aiming for a yearly return of 10%. So as I can see, my assets on my net worth is increasing more than what my interest on my mortgage is. Okay, so I could pay off tomorrow, but for me personally, it makes no sense when I'm getting a greater return on my assets than the mortgage amount I am paying. There is an end game in sight. Say I own 50% loan to value for my mortgage, but it will be paid off in the next few years. Okay, so at this stage of your progress, it should be your net worth is increasing every month. Okay, now it's hopefully in positive figures, and hopefully the only outstanding liability may well be is your outstanding mortgage balance. Okay, it may well be review your mortgage balance when you do have a position. It may well be you reduce your term. It may well be you make overpayments. Okay, so as we said, there are good debt, there is bad debt, but imagine the situation you will be if you were not paying outstanding finance, if you were not paying interest charges, and those charges were working for your personal interests and you were growing assets through them new distribution of funds. Moving on to stage number 4 is probably one of the most exciting stages of your journey. It's what we call the growth stage. Now, at this stage, you are hopefully accumulating assets, whether it's through savings, investments, property, crypto, or other assets that are working for you by creating investment growth. In the UK at the moment, bank interest or savings, you're lucky if you get 1%. Whereas if you invest in the stock market, annual year on returns for the FTSE 100 and the S&P 500 is around about 7 to 8%. So you're compounding your net worth very fast year on year. And you're now in a position where you're seeing your net balance or your net assets improve rapidly. Hopefully you are also receiving passive income through these incomes or dividends. And you are now at the stage where your money is working correctly for you and you are hopefully stress-free and moving in the right direction, albeit on a very rapid basis. Now, it may well be you can afford the nicer things in life, a new car, a new holidays, etc. But again, learn the power of delayed gratification, okay? By all means, give yourself some treats, okay? But ultimately, you're there, you're close, but you're now at the stage where your net assets are growing on a very rapid basis, and thanks to the power of compounding, okay, there is an end in sight. Now, the ultimate aim of the 5 stages is to reach what we call freedom. You've got the choice to do what you want to do. So hopefully you're now at the stage where you have enough assets to have the facility to leave employment if you wish, and you have enough funds in place to fund your lifestyle in future. So hopefully you have assets large enough in value and you're producing income assets which can fund your lifestyle, your monthly bills, your expenses. The simple rule in place from the FIRE movement is, shall we say, is roughly 25 times your living expenses. Okay, and thereby by reducing your portfolio by 4% year on year, it will last the required number of years. So a simple calculation, say you need an income of 30,000 a year, okay, you need assets 25 times that, roughly 750,000, excluding your main residence. Okay, you don't want to sell your house, you don't want to downsize, so hopefully assets working for you, which are what we call liquid assets. So it may well be stocks and shares, funds, it may well be a pension pot. Okay, personally, I made the decision in the early 40s. I'm now at a position where I am financially free. Okay, I have enough assets in place where I can cover my day-to-day living expenses. Okay, now I'm in full-time employment. I do enjoy my job. Okay, my plan is to retire at 55 in 4 years' time when my mortgage will be paid off. So at the moment, I'm using my income to pay my mortgage, to cover my bills, to increase my savings and investments. But ultimately down the road, okay, I will be creating enough passive income through dividends, cryptocurrency, shall we say, rental income, what we call passive incomes, so I don't need to touch my investments or disinvest the assets I own. I can if I wish, okay, but hopefully the income I get from these assets will fund my lifestyle. Okay. Now remember, okay, personal finance is personal to you. Set a time frame for your journey and each of the 5 stages highlight. As we said, it may take a while to progress through each stage. It may take several months. It may take several years, okay, to reach certain journeys or ultimately to reach the financial aim of freedom or financial security. You will get there in the end, okay? It just creates a vision. It just creates a plan. But make it easy. Make it attainable. It may well be you set yourself small, bite-sized targets, okay, at the early stages to be debt-free, to create emergency funds, to create £10,000, £50,000 assets in, etc. Okay, the hardest part is getting started. You will be amazed at the progress you make and review your process. Me personally, I will record my net worth every month. Okay, but you will see progress. Okay, it will be enjoyable. Okay, don't become a slave, but it will be worthwhile. You will get there in the end. Okay, as I said, I made the decision in the 40s. I'm now 51. I'm financially free. More importantly, if I can do it, you can do it. Create yourself a plan. It is achievable. Remember, if you like the videos, smash the like button, subscribe to this channel, and we'll see you again soon.